Binance is making a significant push into traditional finance through its perpetual futures contracts, which now account for over 10% of all such transactions on the platform. These contracts are tied to traditional financial instruments like stocks, energy assets, and precious metals. Over the past 6 months, the trading volume for these contracts has surged past $60.3 billion per week, showing a strong and sustained interest from investors. This shift is not just about volume, it's about a broader engagement with traditional markets through a crypto-based framework. The platform now offers 51 different traditional finance products, signaling a deliberate and strategic expansion into this space. Precious metals were once the dominant category, making up 96% of the volume in February. But by May, that share had dropped to 50%, with energy contracts rising to 30% and stock-linked contracts reaching 21%. This shift reflects a diversification in investor interest and Binance's efforts to cater to a wider audience. Energy commodities, in particular, have seen a dramatic rise in relevance. In May, contracts for Brent crude oil accounted for 10.4% of global spot and futures. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Trading volume. Silver contracts peaked at 11.5% in March, while stock-related instruments, including those tied to Circle shares, reached 9.2% by April. The average market share for each of the 51 traditional finance derivatives is now 1.3%, indicating a broad but still relatively modest footprint. Binance Research has noted that these contracts were nearly absent just a few months ago, but their rapid deployment shows that crypto investors are increasingly engaging with broader financial markets. This trend is not just about diversification, it's about accessibility. By offering traditional financial instruments through crypto platform, Binance is enabling a new generation of investors to participate in markets they might not have accessed before. The shift from metals to energy and stocks suggests that investors are looking for exposure to a wider range of asset classes, possibly driven by macroeconomic factors like inflation, energy prices, and stock market volatility. The 4-day spike in May for newly introduced contracts suggests that Binance is experimenting with new offerings and seeing real-time responses from the market. This could indicate a broader trend where traditional finance is being integrated into crypto trading platforms, not as a separate entity, but as a complementary one. However, the long-term success of this integration will depend on how well Binance can maintain this momentum and how the market responds to new products. One key uncertainty is whether the current volume can be sustained, especially as new products are introduced and investor interest shifts. Another is how regulatory responses might affect the growth of these contracts. If regulators begin to scrutinize these offerings more closely, it could impact the platform's ability to expand further. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Next signal to watch is the performance of newly launched contracts and how they compare to the existing ones in terms of volume and user engagement. If these contracts continue to attract significant interest, it could signal a broader shift in how investors approach both crypto and traditional markets. If not, it may indicate that the current trend is a temporary spike rather than a lasting movement. In either case, the data shows that Binance is actively shaping the intersection of crypto and traditional finance, and that trend is worth following closely.